This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
Where we want to educate you about our market, empower you to make wise decisions, and help you engage with our expert contributors.
The first thing I want to talk to you about is just, the definition, the very definition of insurance is, and I know you have a good way of putting this. Let's talk about that first.
Yeah, insurance, the industry has done a wonderful job making us very, very complicated. It's a very simple process. Insurance is simply the transfer of risk. So basically for your premium each year, each month, whatever it may be, the insurance company makes a promise to go ahead and compensate you or whomever you may injure based on the limits of liability that you have.
But let's talk a little bit about homeowners policies, because everyone in real estate better have homeowners insurance.
Yeah.
I mean, you better have it. And if you have a mortgage, they're going to require you have it. And most of the time, they're going to pay for it out of your payment.
That's correct.
Okay. So first of all, is it required?
To be honest with you, there's no federal requirement
Right.
or state requirement that makes you get homeowners insurance.
Right.
If you own your house outright, you can choose not to get it.
Right.
But again, remember that concept of transfer of risk?
Right.
You have no place to transfer the risk.
But then there's things you might want to add on to that too. Things, possessions, personal property, things inside in the home that you might, some people have and some people don't. Therefore, you have what they call, is it a riders?
Yep. Or endorsements.
Endorsements. So what type of things would I need to add if I had them in the house?
It kind of depends on the type of insurance policy you buy. There are multiple different types of insurance policies to buy. Some are a la carte, and some are kind of like going to McDonald's and getting the Happy Meal.
Okay.
You get a much better product and much better price on the combined Happy Meal.
The Happy Meal package. Okay.
Yeah. In those, they're going to protect basically your structure. So to rebuild a structure, and that's one of the biggest misnomers out there. The number that you find for your structural coverage has got very little to do with your market value.
Right.
Market value includes neighborhoods, schools, the land itself.
Right.
We're not going to replace the land, not going to replace the neighborhood with sticks and bricks.
Gotcha.
So we need to make sure that it's enough to replace the home.
I want to touch briefly, it doesn't really talk about this yet, but I want to talk briefly about the difference between a landlord policy and a owner-occupant policy.
Okay.
Let's talk about first of all, you need to identify what type you want, because it's really important, because there are differences.
A homeowner's policy basically is a policy that is being written against the risk of the individuals that are going to live in that house.
Right.
So Harvey, you buy a house, I know who you are, I know who's going to be in the house with you, I can identify that risk, and I'm going to go ahead and cover that. Now, I'm also going to cover a great deal of additional items in there, such as your personal property, such as your liability, loss of use, things of that nature. A landlord policy is completely different. So you buy a house and rent it to me. As the insurance company, I'm selling the insurance to you, Harvey, but I have no say in who you rent it to.
Right.
So the coverage becomes much more limited.
Right.
We're going to still cover the sticks and bricks. We're going to still go ahead and protect you from the perspective of liability and things of that nature.
Somebody hurts themselves in my home while I'm not there, I want to be covered for that too.
You're absolutely correct.
Right.
But as far as personal property is concerned, that's going to be something that's going to be extremely limited, although you can always endorse it and put more on there.
Yeah, but you really want your tenant to do that and protect their own personal property with a renter's policy.
Absolutely, absolutely. Right. So they're going to have that. The other thing is, dollar for dollar, it's a lot more expensive.
Is it?
And the reason for it is exactly what I just said. I know who Harvey is. I can go and kind of get a good feel who you are.
Right.
But I have no idea who you're going to rent to.
Just explain the general concept of an umbrella policy to everybody, Mark.
An umbrella policy, first of all, is the most aptly named policy there is. It pretty much covers whatever you need it to cover, but it's a liability. Primarily, it's a liability policy. Most umbrella policies are going to cover the liability or extend liability over your auto policy and your home. Then if you have landlord policies, we can extend it over that. Motorcycles, things of that nature. But basically, it is a liability amount above and beyond your basic coverages. So let's say you have $250,000 in liability coverage on your auto or $500,000 on your home. You can buy $1 million policy, and once those underlying limits are used on up, you have an additional $1 million on top of it.
And it's not very expensive to put on top of your regular policies.
For most folks, if you have the right underlying limits, in our agency, if you have the right underlying limits, about $230 a year for $1 million, about 65 cents a day.
Yeah, I think that's money well spent, just for peace of mind. You've been listening to Las Vegas Real Estate Now. If you ever have a question about real estate or any of the other topics we cover, just call me off air or text me at 702-203-1165. You can also check us out on the web at lvrealestateradio.com or on our handle on social media at LV Real Estate Radio. We'll meet you on the radio next Saturday at 11 a.m. right here on the new 101.5 FM, 720 a.m. KDWN, the Talk of Las Vegas.